Hello, everyone. Welcome to the market update for Tuesday, April the 26th. If you have any questions during the week or any that I don't get to in the class, make sure you send those to jerry@traderspro.com. Let's go ahead and get started with our update. Obviously, we've had some big selling. We talked about this the last couple of weeks, expecting a bigger drop at some point. It looked like it was underway in big fashion last week, particularly Thursday. One of the things that I talked a little bit about, I talk about all the time, whenever we have a sell-off near the end of the week, especially on a Thursday or on a Friday, one of the things I tell you is that markets typically don't bottom on a Friday, and so you can usually expect more downside on Monday. Well, sometimes that downside is just in a gap down, which is what took place. We had a little bit of a bullish reversal, but that reversal faded. I'm going to show you something similar happened a few weeks ago, and we could see kind of a similar outcome here. We'll look at the charts here in just a second. One thing I wanted to note here on the directional alerts, a lot of times lately we've just kind of skipped through the directional alerts because there really hasn't been a lot to really focus on those. But one thing that I pointed out a few weeks ago about the long-term indicator, the bull market indicator, is that we were stuck. We had some market. The market had been selling off, but we were still stuck right here on the far right side of that indicator. And if you remember, I mentioned that we had such an unusual bull market run from that COVID low. When the COVID first came out, we had that massive sell-off, and that massive sell-off was sharper than anything we've seen in market history. And really, the rise from that was sharper than anything we've seen in market history, and it created a little bit of an unusual pattern. Typically, a 5 here on this indicator is an extreme, a bull market extreme, all the way to the far right side right here. But you can see we got as high as 22, and yeah, we had the market selling off, but it had to pull back far enough before it started to, before the normal algorithm would start working more effectively. And so we've seen that now. We finally, for the first time in a very long time, we've seen that off of the 5 there, we're moving towards the 4, which means that we're starting to see the bull market have some cracks in it, and potentially could be moving more towards a bear market condition, and it could move there pretty rapidly if we really start to sell off sharply here, which is definitely a possibility. I've talked about that, but I just thought I'd point that out, that you should start to see this now move back and forth again. Now that we're kind of back in the normal range, and again, it's based on the fact that what took place over that 3 or 4 year period of time was, or about two year period of time, was extremely unusual, and it was outside of the outliers, kind of a black swan event, if you're familiar with that term. And so anytime you have a computer program that's used to a certain kind of data, and then something unusual gets put in there, it can change the algorithm a little bit, or make the algorithm skewed a little bit. I thought I'd point that out there. Now, as far as the other indicators, momentum has moved into the extreme oversold area, but we could get even more oversold. We haven't seen that real panic sell-off yet, and I'll talk about that here in just a second. And that'll would get you to the far left side of that range there. Momentum has lagged quite a bit. We're only in the trending area right here, but again, another big market downturn, this can move into the extreme reversal risk pretty quickly. But this goes to show that as much as we've dropped here, we're not oversold yet. We're not in an extreme oversold condition yet that you would expect a bottom to show. So there's definitely some room to run to the downside, and I'll talk a little bit more about it when we look at the charts. Sentiment is still relatively high, but it has backed off of that extreme area here. We're in the high. I wouldn't be surprised if this moves a little bit more towards the left side of that high box, and maybe even out of it. If we do get the kind of the panic conditions that creates more of the fear, maybe we do end up getting into the fear range eventually. All right, let's go to. Let's take a look at the buy-sell ratios here. You can see they're widening out. They are getting into a kind of extremely wide range, although we've seen them get a little bit wider before. There's definitely a bit more room for them to get wide. But again, we want to point out that you are in an overbought condition, just not an extreme overbought condition yet, at least not with all the other indicators. And then sentiment here, we're getting close to that green line. That would be a kind of a buy signal or a bottom type signal. You can dip below it a little bit as it has before, but that's showing there's still a little bit more room to the downside as well that this market can hit. Doesn't mean it will, but it's definitely showing that there could be a little bit more of that. Let's get to the charts. I really want to focus on a couple key areas that I've mentioned several times before, but we need to keep paying attention to them. So again, we had the big sell-off on, here we were last Thursday. We had, or last, let's see, that was Wednesday. We had that little bit of a bearish reversal candle, but the market had been whipsawing a little bit. I wanted to see a little bit more confirmation of that before I got a little bit stronger with my expectation that the market would go lower. Then Thursday, we tried to gap up right here, and then that's when we started to roll over. That made it more likely we were going to drop. I got pretty aggressive with some bearish trades, put option trades at that point, and then we had the big drop on Friday. A couple of things that was significant about the drop on Friday was we closed near the lows of the day. Volume was very high. And we had closed below this key support resistance area right in through here. Look how many times we came down to this area in this cluster of days right here. It held the support right there on that day, resistance on these days right here. And we had closed below that. Also, again, markets typically don't bottom on a Friday. And sure enough, what happened was we did open lower. We opened down here on Friday and even traded all the way down into this level down in here. Now, anytime you get a gap down, especially a big gap down, and this is kind of in between. A lot of times I look for like a 1% or more gap down that's significant. We are just under a 1% gap down, and then we dropped a little bit further. Then we came roaring back, and we managed to close higher for the day. So that's a bullish reversal candle. But I did get into a few bullish trades off of that. In fact, I got out of on the portfolio. I got out of the hedges with the SOXS, the SOX inverse ETF, and the SARK, the inverse of the ARK Innovation Fund. Those were going to go up if the market went down. And so you get a bullish reversal candle, it could mean the market is going to go up. I got out of those. Ended up jumping back in them again today because that reversal, that potential reversal failed. Now, we've seen that happen before. Back here in January, we saw the same thing with the market dropping here. Then we had a bullish reversal day. It gapped down right here, traded all the way down to this level here, came all the way back and closed positive. Looked like we were going to just take off from there. And then look over the next couple of days, we actually moved sideways, even down a little bit on the intraday lows there. I don't know how this is going to close, but we are down at the intraday lows from yesterday. But the point I want to make is that it's still possible that we could bounce a little bit right here, that maybe we do try to rally. We do have Microsoft earnings coming out after the bell today. We've got, we've got Facebook this week, Apple, Amazon, PayPal, Twitter, Boeing, Spotify. We've got a lot of earnings coming out this week that could, now, again, if the earnings are perceived as good, that could cause the market to rally. If they're bad, it could cause the market to collapse. The point I want to make, though, is if they are good and the market rallies, I don't trust the rally. Okay, don't get sucked in on the rally, because once all that news is done, once this week is done, all that focus is on these big companies. Google's another one I think that reports this week. There's not much left after that for the market to really focus on, and you get into a dead period there. Plus, you get to the end of April. The month of May you tend to get a lot of sell-offs in May. You might be familiar with the Wall Street phrase, sell in May and go away. There can tend to be, May can tend to be a little bit more of a bearish month. So if we do attempt to rally here with the market still looking like it has that panic sell-off coming, that might be when it happens. Now, I hope we get a little bit of a rally here, because I want to trade that move down with options, and not overly confident right here to be buying. So, that's kind of, I want to get that flush out sell-off, because that's when confidence buying into the uptrends that you're seeing, and the expectation that things will start to improve at that point. And it's definitely a lot easier for the portfolio, particularly this type of trading where you're trading the algorithms here on Traders Pro. You can get into some of these trades then and really be patient to let those trends run, because that market conditions should support those rallies, and those stocks should run for quite a while. That's when you really start to see the big profits take place in the portfolio. So now this has happened before. We got that kind of a bullish reversal, and it didn't quite take off. It did a little bit here, but then ultimately it did end up going lower. But we're also in an area here on the S&P that's critical, that I've mentioned a number of times. Yeah, I always go back to this February. This big reversal candle on February the 24th. Again, we had a big down day after the down week, and then gapped all the way down here to the bottom, immediately turned around. In fact, within seconds, we were up into here. You couldn't have even traded that bottom, because it moved up so quick when the market opened. So there were buyers here. Obviously, we didn't rally very much off of that, came back down, but look where we stopped again, right in this area here. So we knew that the buyers were here, so they pushed it up a little bit right there, came back again. Buyers then pushed it on this big run through March that again, kind of caught us by surprise, because we were expecting the market to move lower. But it does have a lot of the characteristics of a bear market rally, where it's sharp, but it doesn't last. And so now we're all the way back down, and we're close to this area right here. Now this is the area where I think you're going to start to see panic selling start to kick in. I don't think it'll be just moving below this line right here. I think if it gets below this line, this bottom part down here, about 410 on the S&P, if you're keeping track, that's when I expect that we're really going to see panic. And again, what you want to there's a couple things you want to see when that happens. You want to see the VIX really spike. And by the way, we had this drop right here, and it seemed pretty significant on Friday, but the VIX did not get above 30. And 30 is kind of the minimum area where you consider the market starting to get freaked out. That's the starting point of the market really getting freaked out, is above 30. And we weren't at 30 yet. So it's telling us that despite that big selling, we're not even at the panic level yet. And we did get above 30 yesterday on the reversal, but it came right back down below it again. So we got a little bit freaked out, but then the VIX managed to come back down again. And now with today's selling, the VIX is now back up above 30. It's up around, I think it's up above 31 right now. Now I'll see where it closes. I think that's the giving us to see it, does it close above 30 for the first time in a while? But we're barely at 30, and we're right at this critical area of support right here. So if we break through that, you're going to see that VIX really spike. And that's going to tell you, remember, the VIX is telling you the level of freaking out of the institutional investors. And if you see them really freaking out, you know that's a starting point of creating that bottom. What you also start to see is if you follow CNBC or other news, Fox Business Channel or just websites, you want to pay attention to the sentiment on those sites. One thing that's always a signal of a bottom, that's one of the best signals of a bottom, is that nobody feels like buying at a bottom. And so if you hear a lot of people on a sell-off day, and I did last Friday, there was a lot of people who are still saying, well, this is we could go a little bit lower, but this is where you want to start jumping in a little bit, buying a little. We're not going to be able to pick the exact bottom, and so you want to nibble a little bit. That's still showing that there's a willingness to buy. And there's others that said, that is it. We have bottomed. We're not going to go below those March lows, and we're just testing those March lows, and this is the point to get in. That's not what you feel at the bottom. What you feel is, oh my goodness, how much lower are we going to go? Man, we could retest these lows, or we could end up getting back to the COVID lows or something like that. I mean, just a pessimistic, and even the most confident bulls usually in that situation, and I know who they are on CNBC, I kind of pay attention to their language, because then, when they're saying, I don't see any reason to get in right now, or I'm going to wait, or I don't know how much further this could drop, I'll have to reevaluate things. I start to hear that language from these people that are the most bullish people in the world. That they're shaken, and that you're getting very close to that bottom. So these are things, again, I know I keep repeating them, but I want to pound that in your head. These are signals that you can look for to help not pick a bottom, but know when you're near a bottom, a significant bottom in this case. Not some of these have been minor bottoms, right, and through here and stuff, got little rallies off of them. But can we expect maybe the start of a new bull market run that could really trend up over years? And it may be frustrating that we're not all invested in the portfolio, that we've been sitting on the sidelines in cash, and some of you are just dying because you want to get going, you want to grow your money, grow your account. But I'm telling you, if you're not near that bottom, you give up that money very quickly. If you're all in right now and you get a flush out move, you lose 50% of your capital, and now you're spending the whole rally. When we finally do bottom, you're spending it trying to just get back to break even. Be patient, stay in cash as much as possible, or strategic trades like the inverse ETFs that I have in the portfolio. They'll go up if the market goes down, or sectors that are holding up very well, like oil. Well, oil got to take a little bit of a hit this week, but we'll talk about that here in a second. But aerospace has been holding up pretty good. Stocks that aren't likely to wipe you out to that 50% loss before you even get close to that bottom. So that's something to really keep an eye on there. This area, this is where all those buyers are, and remember, all these people bought on the way up right here too, and they were very aggressive buying on the way up, and they've been hit now as we come back down. And a lot of them, I can tell you, tons of them are looking at this area. They see this area, they're hoping that it holds right here and it moves back up, and they might be stretched as far as their risk right now at this point. Maybe they bought up in this higher area right here. This is that last point where they're hoping it holds. If it doesn't, they've got to sell or they're going to lose everything. So watch if it breaks that, see what happens. I'm telling you, that's where I believe that the panic would start to really kick in. On the the Dow actually is pretty far, a little bit further away from that kind of critical area. It's held up a little bit better as far as the indexes are concerned. But the fact that the Dow transports collapsed, and I've shown that relationship with you a number of times, I think that the Dow as well is going to head towards those recent lows and break those recent lows. Since the transport, we'll look at the transport stocks here in just a second. The Nasdaq, it's been hammered. It is at those lows right now. Now again, we're right at these lows right here, but we got the Nasdaq 100 stocks, the kings of the Nasdaq 100 reporting this week with Facebook, Amazon, Google, Apple. We could possibly get a bounce right here if those earnings are decent. But there again, ultimately we should end up breaking below this low and end up going lower. Just a matter of, does it happen now or do we get a little bit of a bounce? That's hard to trade a little bit, by the way, too, because although I'm very convinced we're going lower, when we go lower, you always have to leave room for a little bit of a bounce. Here we move sideways for a week before going lower. Could you do the same again? Yeah, and with option trading, and that's usually how I trade to the downside, it can be very difficult because you've got a time element in option trading where you've got to time the move right. And you could buy a put option right here thinking that it's going to drop immediately, and then it moves sideways for a week, and you start sweating it that your option might end up expiring. But ultimately, I think we're still heading lower there. Russell 2000, we're at those lows as well. So again, there's that big reversal day right there, and here were those bounces. The Russell is below that, and I think and Russell 2000 tends to be a leading indicator of the market as well. Again, all this is kind of pointing to things going lower. We should end up moving lower, and so the bottom line is that we don't want to, again, another class where we don't want to really get aggressive with getting into new trades. We can build a watch list and have some stocks that we're looking at. But even that watch list, I went through and weeded out a few of the stocks because they looked good at the time we put them in the watch list, but they never got confirmation. And then they dropped on this latest drop, and so I just kicked them out because if they're good again later, we'll see them. They'll show up in the scans, and we can jump back in. We just don't want to have a watch list that gets too big to where we spend 3 hours going through our watch list. So you'll see me do that quite a bit, where I start weeding it out. Bonds. Now, bonds are taking a little bit of a rebound right here, and I think a lot of that has to do with the market selling. Although the bond yields are high and it's not an attractive place for big fund managers to go, it is a safer place for fund managers to go. And so if you see this a lot when the market starts selling off, a lot of times fund managers take the money out of the market, put it in the bonds, trying to get some return while they're waiting for conditions to improve to jump back into markets. And I think that's kind of what you're seeing right here. I still think the downtrend in bonds is still there. Lower highs, lower lows. I don't see a lot of strength in this rally. It looks a little bit more choppy as it trades off the highs of the day here. And again, I think if the market, any sort of sign that the market could bounce or start to rally a bit, I think you'll see bonds take a dive again if money starts coming out of that and going back in the market. And again, it could just be on a bounce if we get a bounce with all these earnings this week. But ultimately, it's still trending down. We'll look at it to see if it's showing any sign of a trend reversal in the next, on Thursday or next Tuesday. But all this looks like is a correction within the downtrend right now until I see otherwise. Gold is again back and forth. Gold looked like it was taking off right here, the bearish reversal candle. Now it's down into here. You can tell why I tend to just skip over this. It's just been a coin flip on this. I really have no desire to trade gold right now with the volatility it's shown me. Oil though, although it pulled back a little bit recently on the selling, had a bullish reversal candle yesterday, a little bit of fall through the upside today near a support area right here. This is all, it could still move sideways for a little bit here, but oil still looks like it wants to go higher. I guess if the economy slows, that could be a factor in reducing demand for oil. I think we could also see inflation reduce demand for oil. Just I know most of you, like me, are thinking about the drives you're making. Are you really going to drive into the city? You may normally drive into the city 3 or 4 times a week or something, and now you try to do it 1 or 2. You try to just because that sticker shock of when you fill up that tank and you're spending $150 on gas to fill the tank up, you tend to drive a little bit less, and it's just a natural that behavior can reduce the demand for oil. We might be seeing a little bit of that right now, but again, there's still demand there, and the chart is still acting like I don't see a broken chart here on USO, and so although I don't like some of the individual the charts of some of the individual oil stocks, they kind of got broken a little bit in my mind with the sharp sell-off that took place. I'm talking like Marathon and Devon. We'll look at those here in just a second. But I may consider just an oil trade in the portfolio here, just assuming that we're holding support right here. We're going to go higher, maybe put a tight stop right below here, just to see if I can't capture some of that upside if oil is still going to go up. Because with oil going up on a down day in the market, that's a pretty bullish sign. The dollar is moving higher. It's getting into extreme area though, extreme reversal risk. Probably means that it could start to pull back or go sideways a little bit. Kind of like what it did back here. Maybe not that long. It could just be real short where it just pulls back a little bit and takes off again. But it's definitely in an uptrend and looks like it wants to continue to move higher. The VIX, again, you can see it had that bearish reversal candle yesterday, and that's one of the reasons why I thought maybe we could rally for a day or two off of that. Right back to moving higher again. But you can also see it's had higher extremes. So, remember, these spikes right here still did not reach that panic sell-off bottom that I talk about. That didn't create that bottom. So you can see that the VIX could really spike, and we could really see bigger moves down coming at some point. And now if we get up into these areas here and we break those support areas I just talked about with you, then we can start thinking about the possibility that we're at the bottom and start talking about that. And I'll point it out in the class when I see that if the conditions are starting to look like we're there or close to a bottom. I'll start pointing that out. Chip stocks, again, they continue to move lower. You're not going to see a significant rally, and particularly in the Nasdaq, if chip stocks aren't participating. They are a leading indicator of the Nasdaq 100. They've already broken below that level, although it tried to hold on to it a little bit with yesterday's attempted rally. We're back below it again today. You'd want to see chip stocks. Chip stocks would need to have probably like a 3-day rally before I'd be a little bit more confident that the Nasdaq could rally significantly off of whatever lows they're at. And then the transport stocks, they had a sharp a sharp rebound right here. Then that big bearish reversal candle, and they're right back down below these lows again. Again, that tells me that the Dow Industrials, the DIA, should end up going below these lows as well, since the transports tend to be a leading indicator. And then Bitcoin also moving lower. So you got everything just kind of starting to collapse here. Let's take a look at the Dow chart again real quick, the DIA. And again, you can see that the Dow transports are already down below these low right here. That's probably headed there. All right, so that's kind of the conditions we're in. Again, the bottom line is we still want to be kind of waiting on the sidelines, but we can look for some stocks that look decent, that we could kind of put in our watch list. Under sectors right here, I'd probably stick to the ones that have held up. Meaning, I'd look for oil, and I'd look at aerospace. And I'm not saying there aren't individual ones in these other sectors, but these are the ones that have brought us some returns while the market has been trending down over the last several months. So now I talked about how I ended up getting stopped out of Marathon and Devon. Let's take a look at those before we look at these other stocks. Switches to the signals. Had that strong bearish reversal candle. My stop was down below here, so I didn't get stopped out till yesterday. It's trying to rebound a little bit right here, but what worries me is we've gone to a lower low right here. So we had this higher high, and then you got an impulsive move down. So this wasn't a choppy move down. This is an impulsive move down and went to a lower low. You got to worry if maybe that's wave A. You might attempt to rally back up. That might be wave B, and then maybe you get another move down for wave C. I don't know if that's taking place. So, I'd be now. Could you jump in for a shorter term move? And if this is wave B, just write it for $1 or $2 back up into here. Yeah, you could do something like that. And then maybe it isn't. Maybe this is a sell off and it goes right back up again. Yeah, I mean, you can, there's a number of things, depending on what your opinion is, there's a number of things you could do. Just make sure you have a plan for your trade. You could maybe think oil's going to go right back up. Okay, go ahead and get in there. Maybe put a stop down below this low. There's your risk. If it does get just back up to here, that's a pretty good reward for that risk. I'd have no problem with that. I just didn't like the behavior of the selling, though, on that. So I'm going to kind of steer clear of that for a little bit. And again, my opinion could change, especially expecting the market to drop further too. I think that's going to still have more pressure on oil stocks to go lower. And Devon was the same way, DVN. You can see it dropped all the way down here. I mean, these were bullish reversal candles. And we are moving up a little bit higher today, although this is kind of an indecision candle. But that's quite a bit of damage in a 3-day period right there. You don't usually come right back up from that. It's possible, but typically it'll consolidate at some point as it's maybe moving back up. But I did like under the oil sector here, I did like a couple of patterns. The CEIX, Consol Energy, 99 strength rank. This is kind of a coal stock. And, it did have a little bit of that sharp sell-off right here as the other ones did, but it didn't drop to a lower low, which I think is significant here. Had a bullish reversal candle there and a nice bullish follow-through day today that did go back to a buy signal. There again, it doesn't mean that this couldn't be wave A, wave B, wave C, but I think there's enough there. You could put a stop down below that bullish reversal day, and you keep your risk pretty minimal. Although you're probably at a 1-to-1 risk if it just gets back up to this high where you're risking about what you would make, but you'd expect it to go higher in this case and give you a better reward for the risk. But that was not too bad. And then another one that I liked was this SBOW, Silverbow Resources, 99 strength rank. And again, this looks, on this pullback here, it looks a little bit more like an ABC pullback, wave A, wave B, wave C. Bullish reversal candle right there. Not a really strong price action today, a little bit of a negative or bearish price action today. So we'll see if it can, you might want a little bit more confirmation on that. Maybe wait for it to go back to a buy signal would be good confirmation on that. And then in aerospace, I mean, all the big players I've mentioned over and over, and we've already had a bunch of these on the watch list. The General Dynamics has a 90 strength rank here. Dropped a little bit right here, had a bullish reversal candle. Looks like it's moving higher. Now, they do report earnings this week. I can't remember what day. Within the next few days. So keep that in mind. You could wait till after they report earnings. But again, these stocks, a lot of reasons for these to go higher despite economic conditions with everything that's going on in the world. I think there's going to continue to be demand for these for a little while. Another one in that group is Lockheed Martin. They did report earnings. I think they report earnings. Or maybe they still report. Maybe they're reporting coming up. Raytheon reported today. That was it. RTX. But that, again, these look good and they've held up pretty well. I mean, we had this big selling in the market and these pulled back just a little bit right through here. And they, or again, cash, sitting in cash is not a bad idea if you don't feel like buying anything right now. Not a bad idea at all. Now in the portfolio, I did add another one off the watch list here. Let's take a look at these. I have Lockheed Martin. We just looked at that one. I have Northrop Grumman. Again, had the bullish reversal candle yesterday. Still kind of hanging on to that one. It was down a little bit over the last couple of days. I added Avis, ticker symbol CAR, from the watch list. Added it yesterday because we had that bullish reversal candle. I like the pattern. I like this kind of bowl-shaped move and this little bowl-shaped move. Kind of look like a cup with handle pattern. It had a buy signal on it. Now it did come down a little bit today. My stop is down below here, so I'm still willing to hold this a little bit, maybe another couple of days to see if it kind of finds some support in this area here. And I'm not too worried about it if it does go down, because I still have the hedges in place. The SOX. This is the opposite of the semiconductor index. So when the semiconductors or chip stocks go down, this goes up. Again, it had a bearish reversal candle yesterday, so I got out of it and then got right back in it today when it looks like it's going to continue to move high, could continue to move higher. I want to have that hedge in place. But I'll flip-flop out of this one. And this one's not going to be based off of, a traditional trend, a trailing stop or anything like that. It's just anytime I think the market could rally, I'm going to get out of it. Anytime I think the market could drop, I'll jump back in it. I want to have that hedge there on those other positions, so I don't get too worried about the other positions I'm in. The other thing I could do is just go straight to cash. Don't worry about anything, But I think on some of the bullish days, I think those aerospace stocks could do well. And on the bearish days, if we do have big sell-offs, these could go up and make me some good money on those as well. So the other one was SARK. This is the opposite of the ARK Innovation Fund, ARKK. Did the same thing, bearish reversal candle yesterday, and then right back to a bullish candle today. Jump back in it. And I think I want to add, let's take a look at a couple things here. Let's look at the market again. Yeah, I'd like to see if we come off the lows a little bit going into the close. But I want to maybe get into USO. I talked about maybe doing this. Oil looking like it kind of wants to go higher here. And then just keep the risk right below this low right here. So if we do have another move down, I think we'll still be protected by those inverse ETFs. So the low down here would be about 71 would be the stop. Let's do that. Let's add that in. I'll just do 100 shares. So the total amount in the trade would be about 7,600, and my portfolio at risk would only be 0.5%. So I'd only lose about $500 if I'm wrong. Let's go ahead and add that in. So I still have, majority in cash, 60% or so in cash. And then, like I said, these aren't all long. Half, or maybe, is that about half or a third? A third would be if the market goes down, these will go up. Market goes up, these should go up. These should go up. So if the market goes down, these should go up. If the market goes up, these should go up. And then cash position there. So that looks pretty good. We've been kind of stuck in this between 106, 108,000 there, and I think that part of that's a little bit of the hedge. Making if market's rallying, you're maybe losing a little bit on the SOX and the SARK. That's all I care about. All I'm really trying to do with having anything in there right now is, can I still grind out a little bit of a gain while I'm waiting for this bottom to happen, and so I can be a little bit more aggressive and just kind of leave it alone. All right, that's all I have. Again, just keep an eye on the S&P, that 410 area down there. If we break below that, should be pretty bad. We should start to see the panic selling kick in at that point. But again, we could bounce around a little bit back and forth over the next couple of days. We'll see, and we'll see how things look on Thursday. On Thursday's update, we'll have Microsoft earnings. We'll have Facebook earnings, PayPal. I think maybe even Google. I think Google's Wednesday. I can't remember what Google is, but so we should have a little bit of an idea of how the market is acting there, and we'll talk about that in the update. All right, thanks everyone. Have a great rest of your week. We'll see you on Thursday for the stock specific class. Bye now.